Welcome to week number 32. We had quite a punchy week last week where there was a bit of a bottoming pattern in the US yields, and that will have reverberations across all other FX pairs, which I will be explaining shortly. But first things I'd like to talk about is TIPS ETF. TIPS ETF is basically an ETF where customers or clients can buy ETF, which is basically the equivalent to a treasury inflation protected security, which basically means you buy a bond, but it will have the inflation expectation subtracted from it, and then they arrive at the figure. You can buy that if you think inflation will be rising. Now, last week or maybe 10 days ago, I can't really remember, BlackRock said that they're starting to sell this thing because they think inflation risks are abating and inflation is coming down. Now, it started to climb down, and obviously you're starting to think, okay, if this comes down, if BlackRock starts shorting, then they got trillions of dollars under management, what other assets can go down with it? And believe it or not, it's gold. So gold is closely correlated with TIPS, mostly on the downside more than upside lately, but you can already see here, as soon as it started coming off TIPS, gold went down with it, and the long-term perspectives for TIPS is to come probably lower until the trade plays out. I imagine we'll come closer to about 120, 123, but long-term that could really hurt gold quite a lot, and we could see gold levels in the coming month closer to the 1700 level, possibly lower. So that's the sort of a long-term trade you want to look at. But going into next week, there is not a lot to love, I'm afraid. First thing I really actually want to talk about is what happened to US yields. So we had was it on the 4th or 5th of August? I think it was on the 4th of August. Let's bring up the charts. We can have a proper look at this here. So it was on the 4th of August. There was US ISM services, and the number was I think I actually missed, or maybe it was not bad. The number wasn't important. What really happened is Clarida says you can imagine raising rates next year, and that's hugely bullish. Obviously, markets catched on to that. They used that news to drive USD/JPY, the yields at all USD majors higher, and the dollar was bid based on that. And that's starting to feel like the yields bottomed out here. And if yields really have bottomed now, that could mean for many other assets that they could be moving higher as well. Usually you find that when yields move higher, pairs like USD/JPY or USD CHF will move higher with it as well. So if I do like a correlation, lately on the downside USD/JPY didn't really participate, but it seems to be participating on the upside every time USD/JPY moves higher. And it could be the case that we have higher levels to come for USD/JPY, and we possibly can take out 111. If you recall, last week we started the week by selling USD/JPY, which worked out not bad early in the week, so over 100 pips in the money. Then all of a sudden this happened, which was more like a reversal. It was a bit unforeseeable. But going forward, I'd be really interested to see if you can start taking out all these highs, because if yields start turning, the value trade is higher, not lower. And that plays hand in hand with my gold fear as well, where gold will come lower as long as TIPS come down, and the whole thing just resolves itself as we move on in the year. Going by the calendar, first 2 days of the week, not interested to trade anything. I never found any patterns consistent with the JOLTS opening or the ZEW economic sentiment report from Germany. Sometimes you might find EURGBP moves on this, but not a strong contender to start offering money onto this. What I'm more interested in is actually CPI, US CPI, and I tend to trade GBP/USD either within the report itself, or I trade it after, as you tend to see some stronger moves emerge after the CPI print. That also means I'm expecting Monday, Tuesday to be quite choppy, and then moving on to Wednesday onwards, we should see the swings sort of unfold once we see the CPI read. I think the CPI read itself will have a strong read, maybe not. What I like to see is GBP/USD start building onto this bearish move it created. It doesn't look like it'll be able to take out what we created here on the 16th of June. I think what I want to do is to start to explore lower levels based on that. Last week we had obviously BOE, and it was a little bit hawkish, not strong enough, but I think it was strong enough to give EURGBP a break the 85 level. That was quite important in markets. They were eyeing that for quite some time. So now that level is gone, in my opinion, in normal fashion, as it always does, expect it to just take everybody the other side. Every time you seem to be breaking important levels of EURGBP, it just rapidly goes the other side just to make sure all the people that are shorter go quickly underwater, and then before it starts cascading down. My longer term view on EURGBP is based on the fact that Bank of England will be quicker to raise rates than the ECB, is closer to 82 and then possibly 80 cents on that pair in the long run. And so we will be more closely looking if we can get an entry next week. If not, wait maybe for deeper retracement to start getting back into it. But that trade really hasn't hugely changed since in January I started talking about this, where we started having these higher levels, and then we just came 500-600 pips lower. I'm expecting this to just extend. And for the rest of the week, again, not a lot to love. We will have PPI on that day and core CPI and unemployment rates. I'd be interested to see if EURUSD can move on that. There's quite a lot of weighing on that pair. See if EURUSD can start establishing lower levels. Some I'll be closely looking on, by the way, to see if dollar can go any stronger in the short term is US 2-year yields. The US 2-year yields, in my opinion, will continuously be capped under the 25 level until we have an idea when the Fed will start raising rates. So tapering first, and then we have an idea when the rate liftoff comes. Until then, I don't really see how how the short end yield can escape that two levels. It should resolve to the upside eventually, but in the near term or even medium term for another month or two, I don't see it. I don't see the value in chasing this trade higher. That also means maybe dollar will struggle as well. So keep an eye on that. I'm going to overlay dollar for you with the 2-year yield just to get a better optics on this. Again, close correlation. Naturally, the yields will have way lower volatility and a lower range than the DXY itself, but majority of the peaks and flows tend to come together. So next week and the following week you start trading, start getting worried about any dollar strength and possibly even fade some of it. That's all I wanted to cover for this week. Wishing you all a profitable week. Expect some choppy Monday, Tuesday, and then as the week rolls on, we should see a little bit more juicier moves. Thank you very much.